So a very good afternoon to everyone with us today. My name is Ghada Uthman, and I'm the head of programs here at the Pearl Initiative. It's my pleasure to welcome you all to our virtual panel on corporate governance in sustainable finance. Before we begin, I'd like to start by first introducing Pearl Initiative. So the Pearl Initiative is the Gulf region's leading independent non-profit organisation working to improve corporate accountability and transparency across the private sector, family firms, MSMEs, and philanthropic and non-profit organisations in the Gulf region. We were established 10 years ago by regional business leaders and the UN Office for Partnerships. More recently, we are one of the few organisations in the Gulf region to receive a special consultative status from the UN Economic and Social Council. The Pearl Initiative runs programmes focusing on governance-related matters, conducts regional research, convenes business leaders, government and civil society leaders and students to discuss challenges and opportunities in implementing best practices in the workforce. We also run workshops, trainings to support business professionals as they take the lead in implementing corporate governance, accountability and transparency practices in their organisations. With this, I would like to ask Dinesh Shamsi to say a few words about ACCA.
Thank you very much, Ghada, for that introduction, and good afternoon to everybody joining, and to our ACCA members. On behalf of ACCA, welcome to today's session, where we will be discussing corporate governance in sustainable finance. So who are we, the ACCA? It's an acronym for the Association of Chartered Certified Accountants. We are a 117-year-old professional body, and we have over 233,000 members and 530,000 future members in 178 countries across the world. We have a network of 80 formal partnerships in place around the world with other accountancy bodies, professional associations, and academic institutions. Our partnership program means that the profile and standing of our members is enhanced, regardless of where you choose to live and work. We have over 7,600 approved employers worldwide, and we are committed to ensuring our stakeholders have the right skills, ethics, and competences to add values and drive business around the world forward. Our role in the Middle East is to continue growing and understand the value that professionally qualified ACCA accountants bring to businesses and economies in the region. The session today is in line with our trimester 2 theme, which is rethinking sustainable business. In these exceptional times, society values are shifting faster than ever as citizens seek a fairer and more ethical world. To restore trust, business leaders have a crucial role in minimizing environmental damage and putting social responsibility at the heart of their strategy. We need sustainable businesses that deliver financial returns while generating positive value for society and being environmentally responsible for the planet. We have a host of resources, including a professional insights report and 5 ways you, as professionals, can create a sustainable world on the ACCA Global website. So at ACCA, we believe continuous professional development is essential, as CPD supports your career by providing you with the knowledge and skills that you need to excel in your role, as well as enhance your employability for the future. We have a wide range of certificates, including data analytics, digital innovation for finance, and business valuation, which are all available on our website. And for the ACCA members joining us today, it's incredible to see your dedication in ensuring that you are keeping up to date with the latest trends around the world, specifically in the sustainability agenda. And post this session, you can also receive 1 CPD certificate, which accounts for 1 CPD unit, which you can add to your annual CPD declaration. Thank you so much and enjoy today's session.
Thank you, Dinesh. It's always a pleasure to hear about the work of ACCA. And it's a great pleasure for me to introduce our moderator for today's session, Jessica Robinson. So Jessica is a sustainable finance expert and the founder and managing director of Moxie Future, the world's first insights, education and community platform, empowering women as responsible, sustainable and impact investors. As well as running Moxie Future, Jessica works as a strategic advisor to institutional investors, think tanks and governments on all things relating to green finance, sustainability, responsible investment and gender. Jessica also has an extensive background in professional services, business consulting, focusing on financial services, environmental finance, sustainability industries. She also frequently contributes to articles, authors reports, speaks at conferences on issues including green finance, financial market developments, climate finance policy, broader sustainable finance issues, as well as gender. Also, Jessica has recently published a book on sustainable investing entitled Financial Feminism, A Woman's Guide to Investing for a Sustainable Future. Jessica holds a master's in science in applied environmental economics from the University of London, a master's in science and politics from LSE, London School of Economics, and a bachelor's in economics from the University of Manchester. She also holds a professional diploma in financial management from ACCA and is a full-time postgraduate, has a full-time postgraduate diploma for non-executive directors. So thank you for joining us today, Jessica. And
thank you.
Thank you. And with this, it's over to you to lead our session for today.
Thank you, Garda. I didn't realize you were going to tell everyone my educational qualifications there.
It's always interesting to know.
I like it, you know. So welcome, everybody. This is great to have you all on board, and we've got a really good turnout. This is actually a really exciting and pertinent discussion today because we're talking about governance and how this relates to the growth of ESG and sustainable finance. So a big thank you to ACCA, and I'm pleased to hear everyone's going to get their CPD points. And of course, the Pearl Initiative for organizing this webinar. I won't reintroduce myself and my multiple degrees, but what I will say is we've got a fantastic lineup of speakers, and I'm going to be a little bit lazy as a moderator and pass to each of them to introduce themselves because then they can pull out what they think is pertinent. Lena, should we go to you first?
Yes, of course, Jessica. Thank you so much for having me on this panel today. My name is Lena. I head up sustainable finance for Africa and MENA in Standard Chartered Bank, leading our sustainability agenda, the global sustainability agenda on the ground here in the region, specifically in MENA and Africa, and kind of capturing the best practices from across our dynamic footprint. To bring it to this part of the world, and also pass on the good stuff that's happening and that's coming out of this part of the world in terms of the regional and country firsts as well to other parts of the world. My background has been in banking, corporate finance, and investment banking coverage. And then my colleagues like to say that I've seen the light and I've moved into sustainable finance. And here I am, happy to be here, very delighted to be speaking to all of you. I won't go through the list of degrees that I have because they've all very short in comparison to what you've done, Jessica. But yeah, over to you.
Wonderful. Okay, so for a bit of gender diversity, Ivano, we're going to go to you next, please.
Thank you, Jessica. Ivano Iannelli, I've been in the region for 2 decades, initially with the United Nations managing the regional hub, and later with Dubai government running greenhouse gas inventories for all of the GCC countries. Now focusing on compliance to the European Carbon Border Adjustment Mechanism for Emirates Global Aluminium, and a founding member of the ESG Foundation in the UK.
Wonderful, thank you. And last but not least, Huda, can you introduce yourself too, please? Oh, on your mute.
I was saying good morning, good afternoon, and good evening for whoever is connecting, wherever you are connecting from in the world. My name is Huda Al-Khazaimi. I am by practice, I work in industry and economic development in general. I am here, I'm humbled by all of your great CVs on sustainable investments. I'm here in the session because I work for a non-for-profit organization that are aiming to use industrial development to attain goals, SDG goals on different platforms, particularly goals number 9, number 3, and number 10 and 11. And number 17, I think all of us are here for number 17, which is all about partnerships and collaborations. So looking forward for this conversation and to talk about our kind of experience on the ground raising funds for SDG initiatives across board. Thanks.
Wonderful, thank you. So before we start with the questions, I'm just going to set the scenes a little bit. You know, I often joke that I'm a real old timer in ESG and sustainable finance because I've been in the field for about 15 years. But given its nascency, that makes me an old timer. But I think what we've seen in the last couple of years is really transformative. We've obviously seen a massive growth in interest around ESG. We're seeing more and more sustainable finance products coming onto the market. Obviously, this is happening globally, but it's also happening here in the Middle East, although we do find ourselves a little bit behind the curve in terms of other regions. I think when we look at corporates and financial institutions, we're really grappling in terms of what ESG means from a regulatory perspective, from a risk management perspective, from a revenue and business growth perspective. But of course, and what we're going to talk about here is sort of organizational and governance perspective as well. We really want to hone in on the corporate governance piece and consider how this is in fact an umbrella concept for ESG and sustainable finance. And I think certainly most of us would agree that a company that is not well governed is unlikely to have a strong hold on obviously material, environmental and social risks. And I think actually it's worth noting, and I'm interested to hear from our panelists, that the COVID pandemic has actually really highlighted some of these key issues. You know, I often talk about, for some of us in the ESG space, when the pandemic hit last year, there was huge concern that this would be a massive setback for us as, you know, as governments and regulators became much more short-term focused. But actually this hasn't happened. And the pandemic has actually focused our attention on these global risks and how they can have such ripple effects through our economies and our societies. And to a certain extent, that's actually elevated ESG up the agenda of corporates and the big financial institutions. I think we've also seen that many of the sustainability leaders have actually been quite resilient during the downturn. And many would credit that resilience to strong governance and leadership on sustainability risks and opportunities. So today we're going to really explore various themes related to ESG. We're going to kick off with some broader perspectives and then drill down into some key issues such as the role of the board, financing the SDGs, the rise of climate change up board and senior management agendas, and of course, how we can effectively manage impact and ensure that these impact measurements are part of board and senior management KPIs. Now, before turning to questions, we have a polling question for everybody who's on the call, and it should appear. There, you should have it in front of you. If you could please answer that, we will be displaying the results shortly. And then towards the end, we'll also have a second polling question that we can look and share the results with you. So as we, let's turn now just in terms of kicking off the discussion. I'm going to start with a fairly general question. In terms of your role and your view, taking on board the perspectives of your clients and obviously your stakeholders, where do you feel that ESG sits today in terms of progress, but also in terms of the challenges that we need to overcome and the potential opportunities that actually lie ahead for us? Huda, I'm going to ask that question to you first, please.
Thank you, Jessica. Great question to start with. I think there is a bit of sensitivity border here when you talk about ESG and the era of SDG. We've seen in the past that there is a rise of awareness to the generic, need to address ESG agenda across boards, especially on the boards. I'm sitting on several industrial cluster boards, and definitely there is a push to address sustainability, to address inequality, to address many of the social and as well economic pillars and the governance pillars of the ESG. And the rise has been massive. If we talked about 54% to currently 84%, not only customers and clients, but investors actually asking and having that level of awareness to address investment in the ESG kind of ecosystem. However, we have to be very careful because we are working with a global agenda when it comes to SDG, and ESG is just a component of that. A very supportive component, a very critical component of it. And today, when we talked previously while we were preparing for the panel, one of the massive challenges that we're facing is the fact that we have, because you have a micro goal and you have a grander goal when it comes with SDG, you're facing what we call SDG washing, or channeling investments that could just come for the purpose of using it on SDG platforms and ecosystems and projects into only an ESG projects for the sake and the purpose of checking the list, I would say, making sure that you are checking this governance list that exists in most corporates and environments, especially right now post the pandemic, but we'll address this later on in the conversation.
Yeah, and I think that issue around greenwashing, SDG washing is actually one of the most critical factors we face right now in terms of the market. So with that, Lena, I'm going to turn to you. Obviously, Standard Chartered, you're grappling with a lot of this as well. Perhaps you can share your perspective.
Yeah, absolutely. I mean, I completely agree with Huda on the point of what we call greenwashing, or more broadly SDGs or ESG washing. I think the main challenges I would talk about are, I can tell you the challenges that we face as an institution, but also the challenges that we are seeing our clients grapple with. One of the things is that our impact as a bank extends to what we finance as well, and that's why we have made some bold ambitions towards not just going net zero from our operations, which we have committed to by 2030, but more importantly in terms of our scope 3, which is our financed emissions, and how we assist our clients in terms of helping them transition. Being in this part of the world, the biggest challenge is obviously how do you ensure that the clients that are in the harder to abate sectors like oil and gas, like mining and metals, and those sectors that are a high carbon intensity emission type of sectors, how do you make sure that you bring them along this journey? Because this is something that is really important. It's not like we're going to drop our need for energy, for oil and gas, for mining and all of that stuff. It's about how we transition and ensure that these businesses are still very much there in the process when we get from A to Z. And in that spirit, we have been working very closely with different clients on advising them on transitioning, on moving from from conventional ways to more sustainable ways of running their businesses. I think the opportunities are definitely there. However, there are technological advancements. There are different ways of thinking and ensuring that things are going in the right direction, whether it is through investors or lenders from that perspective. And I think the data, gathering the data and the impact and bringing that creativity or creative solutions, whether it's from the financing perspective or the technological perspective, is going to be a key role. But at the same time, it is a challenge because it's not something that's already there, but it's a huge opportunity because it's a new level playing field. It's a new place where you can be completely creative and innovative in how you structure certain things, and you incentivize companies and even governments to go towards that direction.
Okay. Yeah. Thank you for that, Lena. So Ivano, now to you in terms of where you see ESG today, our challenges, and how we're going to move forward.
I have to say, I'm the one who spent the most time with the E of ESG, but I would rather focus on the S and on the G. First and foremost, ESG has become sort of a compliance minimum threshold type thing. What the investment community, what regulators, what just about anyone wants to say is a company that has got his proverbial ducks all in a row. So they want to see a company resilient to whatever comes next. And what is coming next is obviously the aftermath of a pandemic. So they want to see a properly governed company. They want to see respect for their communities, as well as the ability to cope with the ever more stringent environmental compliance cascading from the Paris Agreement, having kicked off on January 1st of this year. So where does it stand now? Well, there is a lot of learning taking place, but nevertheless, there is a continuous growth in ensuring that companies are properly governed. They have diversified their board. They have all their best practices in place, and a number of platforms have been created just to showcase and benchmark how well these companies are performing vis-a-vis their peers, which have not used such regimes. At the end of the day, let's be honest, they're not going to substitute themselves to human activists, human rights activists, or environmentalists. At the end of the day, all they want to see is that company X will be able to deliver its product and its services in an ever-changing environment, in an environment where fossil fuel are being frowned upon, in an environment where diversity and inclusion is embraced. And the ability for a company to do it sooner rather than later adds value to the overall proposition.
Yeah, thank you. I mentioned in the opening about the pandemic and the impact that's had on ESG and sustainable finance. And I think with the pandemic front of mind, as we look forward to a post-pandemic world, how do we move capital at scale, and where do you think this needs to be directed? And I'm asking very much in the context of how we're seeing finance and investment priorities shifting, particularly towards the Sustainable Development Goals. And unfortunately, one of the impacts of the pandemic has been a falling back in terms of our progress towards the SDGs. So it's making our job even harder. Ivana, I'm going to go back to you on that. Just think about some context about the pandemic.
One thing that I've been quite happy to observe is the fact that the pandemic literally allowed for change to take place. So obviously we are human, we are adverse to change, and by change I don't mean positive change, because nobody ever complained about winning a lottery, but loss. So loss of comfort, loss of services, loss of activities, whatever, it's perceived as something you no longer can avail of. And the pandemic was a very good test of our resilience at all potential levels, whether this be a professional enterprise, a social endeavor, or vis-a-vis our simple lifestyle. Mm-hmm. So what we have seen is that we are capable of change, check. We are also very good at adapting, double check. All we need is to get out of that comfort zone, because at the end of the day, let's be honest, it is a collective effort. The reason there is so much power being produced, the reason there is so much resources being generated is because we demand them. And we demand them for a cheaper price. We demand them for our laziness or comforts, whatever we want to label it as. So at the end of the day, what ESG maps is the ability of a company to continue to provide services in a resource-constrained future, mm-hmm. allowing us to forecast how exactly is a company capable of adapting to this shift in the way business is, starting from energy all the way to actual recycling and other things. And again, as I'm speaking with you, I just finished participating in the government accelerator for net zero. At the same time, the UAE, just like many other countries, are aligning the private sector towards a common goal, which is, you know, what a bunch of countries have signed up to in 2015 in Paris. Now, how does that cascade down is the ability for a company to continue providing its services, its product, but with a lot less resources, and make it cost competitive.
Yeah, absolutely. So Huda, do you have any follow-up comments in terms of the post-pandemic world?
Actually, it's a very important question for us to have a benchmark, Jessica, of where we are standing now in comparison to the status quo that existed prior to the pandemic. We know, thank you very much, Ivano, for bringing the Paris Agreement. According to the OECD reports in 2020, the Paris Agreement showed us that we would have to only utilize 1% of the trillions that could be financed from the global financial assets that exist around sustainability to fulfill the SDG investments. And that was a mapping of $379 trillion, according to the report. And just using 1% of that would be just enough to fulfill the SDG kind of financing map. And when that report was released for Paris Agreement, we had a gap, an annual gap that is being, I think, approximated around $2.5 trillion, and an estimation of an ability of raising $7 trillion for the cause of fulfilling the SDG gap across boards, the SDG financing gap across boards. Now, when the pandemic hit, we had a different level of statistics because the priorities went different. True to Ivano's conversation, yes, we had a stress on utilizing the financial assets that we have as fast as we can. And actually there was a positive stress, a positive impact on having collaboration. This is why you see today sustainable finance is the motto of the day. Wherever you go, everybody is talking about actually solidifying efforts for sustainable finance and pushing for SDG investments and ESG investments across boards. So that's the positive impact. But the negative impact here when it comes to the numbers is that we are pushing $1 trillion USDs into reviving the economies on these developing countries. And we're still maintaining a $2.5 trillion SDG gap. And this would give you a generic estimation of a collapse in external private financing by 700 billion in comparison, for example, to 2019, and almost 123% drop in the overall investments of FDIs, 80% drops in the inflows of investments for the cause. So in terms of numbers, we're not kind of doing great, but in terms of structure and aggregation of efforts, maybe we are accelerating that more than what we have done in the past decade, I would say, because we started this journey 2015, right? So on the map here, we have to be aware of the power of industrial solution here that would help us accelerate our base into, for example, building financial institutions or financial solutions that would be fit to address SDG goals. And this is very important. This is the conversation that Lina brought into the map. She talked about the power of connecting all of these assets together and having this kind of a transparency. Because the minute you have a transparency, you would have a proper reporting. And the minute you have proper reporting, that would help you build incentives for the global effort to just pull in collaboration on a much tangible base. Mm-hmm. One last point that I have to highlight here, it's not just about the acceleration, the positive side here. I don't want to leave you with a better taste of negativity there. But the positive effort is just you've seen countries racing to share their digital platforms across board. So from UAE, we have the iCODI program, which is the International Center of Innovation Development, that has been an effort to provide for the SDG goals on development and industrialization across boards for over 80 countries on the map. And it was endorsed by the ITU, and we still see several of these kind of efforts being accelerated across boards. So this kind of, I would say, intangible efforts of providing for the infrastructure of the SDG is very important, as well as of the financial assets that are being put into play. Thank you.
Thank you. Thank you. And I should just add, and some of you are already throwing some questions in there. If you do have any questions that you want me to weave into our discussions, just post them on the Q&A section. Shall we see, do we have the results from the first poll? Can we see those? Okay, so the question was asked, have you or your company implemented sustainable finance as part of a long-term strategy? So 49% of you responded no, 27% said yes, and 24% said I'm not sure. So thank you for that finding. I think that's actually quite interesting. It's obviously hard to know who we have on the webinar, but that's obviously actually quite positive in that we've got a lot of work to do. Lena, I'm going to turn to you now because I want to ask, you know, it's great. We are seeing this progress being made, and I think increasingly that urgent need for action, particularly on the SDGs and climate change. But let's talk about governance a bit more. What do you see as the role of the board and its directors in ensuring that we move fast enough to hit these ESG priorities? And where are you seeing, certainly in your role, that pressure coming from in terms of boards and why and how fast it's happening?
So we think that the role of the board and the governance structure being in place is really important. And the reason it's important is twofold. First, it's because of, you know, where we are providing sustainable finance solutions, we and investors equally, especially on the fixed income side of things, they want to know where this money is going, and they want transparency, they want reporting, and they want to know exactly how the funds are being allocated. Equally, we need to understand, for example, in areas where we provide sustainability linked facilities, so where we set KPIs for clients to meet and accordingly provide incentives or penalties if these targets are met or not met. I think that the role of the role of governance here is going to be really important, because that's how we will be able, that hinges on the credibility of these entities. Now, why boards need to care about this is because it's all about attracting investor demand. For example, investors are pursuing or considering pursuing ESG integration according to several studies that we've done, and a lot of them are seeking to align their investments with the SDGs. The other angle is that the ESG is driving volumes and high returns. We have seen a load of resilience coming from companies that have embedded certain sustainability or ESG goals within their businesses during the pandemic, for example. And we know that customers are also willing to pay premiums for products that are sustainability manufactured, for example. And consumers are increasingly feeling very strongly about improving the environment and have been rethinking everything that they have been doing and consuming equally as well. The other angle is regulators, and we are seeing regulators more and more coming into the picture and providing, you know, either guidance in the beginning, but more so on the base on the kind of principles that have to be adhered to that make sense. And that's also to avoid, you know, going back to the initial point on greenwashing. That is really important from that perspective as well. The other point I want to bring in here, Jessica, is about climate risk, but not just climate risk specifically, because there are two elements here. There is this climate risk to the business operations of things, we are going to see rising sea levels. We are going to see droughts. We are going to see floods happen. So how do we make sure, you know, businesses survive these implications? How do they adapt to these types of risks that are slowly arising, or maybe now fastly arising, in order to build more resilient businesses? And that's why the role of the the role of the board, and instilling the right governance structure in how you operate is going to be increasingly important.
Yeah, no, I agree. And I think one of the things, you know, in terms of the governance piece and a lot of the work that I'm seeing is this now is becoming a C-suite board level discussion, whereas 5 years ago, it really wasn't. So that elevation, I think, is critical. I'm going to ask a question that's sort of tying in some of the questions that I'm seeing coming up from the audience. I want to talk a little bit about differences in regions and markets when it comes to ESG and the governance component, in particular, looking at differences between those markets and how does the Middle East sit against international leading practice? Within that context, I want to talk a little bit about, because a number of people have raised the fact, you know, the region has the issue around oil dependency and in terms of economies designed around fossil fuel. So how do we deal with that in this region, and how do we ensure appropriate governance to ensure that financial institutions, investors and corporates are really playing that part in the low carbon transition? Ivana, I'm going to go to you first on that, please.
Well, actually, I would praise the region on a couple of those letters. And essentially, let's critically look at the governance structure of these oil and gas based economies and their efforts ever since to diversify. I recall even before the Paris Agreement, the UAE was attending climate change events globally and defending economic diversification, simply because they knew from the outset, and again, we live in a very top-down type environment. So the boards know that energy is a very precious resource and we should differentiate from it. Now, having said that, we do live in an environment full of news about hydrogen being the next economic growth spur, all these sort of new directions set forth, renewables with its leading tariff rates globally for the past 5-6 years. So all we can see is how governance specifically has facilitated a shift from a predominantly oil and gas economy to a more diversified economy. However, when we compare the region to other parts of the world, what we lack is in the S. So governance, kudos. I've seen fantastic examples in place. Environment, I have to say I've seen a lot more than I would have expected. But on the social side, large entities are implementing global class strategies and frameworks, but the SME has not. And this is where I've seen most of the struggle with the little companies feeding into the larger value chains, which are unable to keep up with the social component. Mm-hmm. And this is a problem also for those who interact with other economies, Europe, US, where this is frowned upon, and it's outside of the immediate responsibilities of a company itself.
Okay, great, thank you. Lena, I'm going to turn to you now with that question in mind, but we've also been asked around loans versus green loans versus sustainability linked loans and so forth. And so from a sort of product perspective, in terms of the Middle East in the region, how do you see this area of development around sustainable finance products moving forward? And do you see it being driven from senior management and board level?
Yeah, thanks, Jessica. I think on the sustainable loans or sustainability linked loans and green loans, we are seeing those increasingly becoming more and more prominent. Clients have been actually approaching us in terms of, you know, thinking about different ways of structuring these solutions for them. And a recent example, which is in the public domain, is Majid Al Futtaim. I mean, I praise them for the work that they have been doing on the sustainability side of things. Usually on the sustainability linked loans structures, what happens is that there's a margin ratchet and the pricing moves up and down depending on meeting KPIs. This was a regional first and I think maybe a global first as well, if I'm not mistaken, in terms of it being a penalty only structure. And that basically goes to show how, you know, things driven from the top, driven by senior management actually get implemented into successful, you know, facilities for the company, and that attracts a lot of capital from lenders in this case, but also on the bond side of things, there is also a similar structure whereby we have sustainability linked bonds. And yes, it might not have been something that was really prominent in the region about a year ago, or maybe more than a year ago, but we are increasingly, you know, where we are talking to clients about structuring solutions, financing solutions for them, we are increasingly getting questions on how can we do this in a sustainable format? How can we ensure that, you know, we are also holding ourselves to a promise that we are making?
Mm-hmm. Yeah, absolutely. I agree. I think, and Huda, now I'm going to turn to you, Huda, because I want to ask you, you know, one of the key pieces of the jigsaw is how we identify, measure, and report this impact, and that's both internally and externally. From a board and senior management perspective, this is obviously critical, right? And as Lena said, you know, we need to be ensuring we're going where we say we're going. Huda, how do you think this is evolving, and where do you see it headed in terms of as ESG evolves and of course the measurement tools and data sets become a lot more sophisticated?
So we see a huge shift towards a granular level in terms of reporting and transparent level of reporting that does not exist only on a static base when it's, you know, provided every quarter kind of output, but more into seeking to have platforms that would give you a dynamic reporting of the impact that is happening on the ground towards SDG financing. And that's because of the efforts that the SDG committees across boards in the UN and OECD are putting on the ground to make sure that there are granular level of requirements that need to be met for each SDG. And these targets, I think we have over 196 targets for the 17 SDGs that needs to be attained. And when you go to the global SDG platform, you get to see on the ground what was achieved and what was not achieved. So when I'm not going to just talk about ESG in general, because there is a different level of reporting that exists on that map, but I'm going to go into the global map of reporting when it comes to SDG. And how are we seeing on the ground right now more granular reporting that is aiming to, I would say, counter exist against the tendency to SDG wash or greenwash, as you have said it, the financing that is going towards certain initiatives. And this is very important for us. And it's very critical because you do realize after analyzing all of these indicators, where is the gap? Where is the gap when it comes to the global financing? And maybe Lena could help us in this. I think the banking industries or the financial institutes or all the mobilization effects that exist around financial resources needs this actually. It needs it before you have any kind of efforts on SDG 17, which is in partnerships and collaborations. We need to understand where are the FDIs are being channeled, what kind of private investment, public investment do exist, and where are they being channeled to? So when the global analysis tells you in OECD report that we have over $19.8 trillion going for negative screening on SDGs. and around 17.5 trillions on ESG integration. So you're kind of losing a lot of momentum when it comes to the SDG, because we end up having only 1.8 trillions of USD dollars channeled for these purposes that would have a positive impact. So reporting is very important, and hopefully soon we will have a platform that are very transparent online, that are empowered by analytics as well, to provide a dynamic source of information. Thank you.
Thank you. And Ivana, to you, a similar question, because also you've raised obviously the social piece a couple of times, and reporting and measurement around social issues, as we know, it can be quite challenging. Do you have a perspective in terms of impact measurement and how we ensure that boards and senior management really have a view on what those social issues and progress towards those social objectives really stands?
Jessica, I think I will scare all of the audience right now. Most of the work that I have performed on a personal level over the last 2 years has been consultancies to evaluate companies' SDG scoring and ranking without the company actually knowing about it. And this is investors that want to put capital in company X and wish to have a sense of their ability to comply with the climate resilience, with the social perspectives, and so forth, so on. So the biggest assumption that companies do is that I don't need to do a sustainability reporting, or I can just do whatever and they'll do some sort of report, but they do not acknowledge that that data is actually being used by third parties for benchmarking a performance comparison. Now, having said that, it's not very hard to put together a sustainability report. The major difference between someone advocating what I'm good at and conveniently leaving out the areas where you're not performing well without explaining why is exactly that. People like me are hired to read between the lines. So I'm able to look at a company sustainability report and say how odd they're not reporting on this performance indicator, or how strange they aggregated this number with something else. And it's exactly the lack of cleverness by omitting data streams, which is ill perceived by the investment community. Because obviously, if I cannot find a specific data field, I'll have to make an assumption which may be correct, but the vast majority of the times is just way off the charts. And let's take the UAE, for example. If we create a localization algorithm for ESG in this country, the companies that actually go out of their way to check and verify where their suppliers, something silly, hold the passports of their employees and staff in compliance to the local laws, because it's illegal in the UAE to hold the passport, should be graded above the ones that merely have them sign up an undertaking that they will comply with government laws. However, from an ESG ranking, this doesn't happen simply because the ESG will actually say, are you checking on this? Is the company liable? Is the company doing anything? And if your supplier's base doesn't enforce it, the company that actually tries to do something good is at a deficit and will most likely avoid disclosing it.
Yeah, absolutely. Thank you. Just a reminder, we will be finishing at 3. So if you have any questions, do put them in the Q&A box and we will try and reach as many as we can. We do have a second polling question. If we could please put it on everyone's screen for the second polling question. Investment decisions. Do you think short-term investment decisions may be an obstacle to long-term sustainable investments? A yes or no answer. So please give us your thoughts on that. That would be fantastic. I'm going to go to one of the questions from the audience, and it's a sort of quick answer from everyone because it's something that's obviously been very well debated. What learning does the panel have from the debacle of the Abraj Group in relation to transparency and corporate governance structure? So quick answers, please. Lena, I'm going to you first.
I must say that's an excellent question. I think there's a lot for us to learn from that. I mean, transparency and questioning, and that really highlights the importance of governance and the importance of management and how they structure themselves around investments and are extremely transparent. I mean, the more transparent an entity is generally, not just in the light of impact investing or financing or the SDGs, just generally even having that level of transparency is extremely important. And I think now, especially after this, there is a lot of stress from investors. I mean, I think to most of the investors that I've spoken to, one of the main things that they look at when they are assessing partnering with either funds or other potential partners on the ground, especially where they are investing abroad in countries or geographies that they don't know very well and need professional experience on the ground. The most weight that we see them putting is on the management, the amount of due diligence that they do just on that partner and on the governance structure of that partner and the management and the leadership and the background and experience, etc., is really leading a heavy weight of that investment decision. So absolutely a lot of learnings to do from or to get from the Abraj situation. But also more generally, it's really good practice to have that.
Okay, great. Huda, now to you in terms of the Abraj group's recent woes.
I think I share the same kind of input as Lena. Definitely, it has been put a huge level of pressure when it comes to operational due diligence and the governance structure that should be put into the ground. And maybe this takes us to the previous point that Ivano talked about. We could have regulation, but regulations might not be enforced. So we are right now into playing into the ground where transparency is very important. Transparency and maybe the due diligence process is not anymore something that is being done on an LP or GP kind of perspective, but it's pushed more into the client perspective. And to do that, you need to provide information, you need to provide more substance when it comes to the different level of investments that are available. And we're seeing this across all industries, not only in the financial sector. We're seeing this push where you are pushing the ownership of investment, the ownership even in the new fintech kind of innovations that are coming, the new decisions that when it comes to investments, pushing it to the client and providing them information where they could as well elaborate in the due diligence process.
Yeah,
so definitely.
I think also there's, one thing that's very apparent is the world seems to now be full of so-called ESG experts. Everyone's an ESG expert, right? And actually, there's actually a dearth of ESG real expertise globally. And I think that actually makes the role of boards and governance frameworks even more critical. And Ivana, to you then, in terms of Abraj.
Well, everything relevant has already been said. I'll just add what I said before. It's our ability to understand what is not being said. So yeah. I personally think that Abraj was regulated, but they've been exceptionally good at storytelling. They've been able to convince us that they were up there with the best in class. Mm-hmm. And again, we look at things, but even our ability to look at simple events like this panel, which is, I have to say, not gender balanced. I feel outnumbered.
As someone who's been speaking on these panels for so long, it's just so wonderful to see so many women.
Well, I still feel a bit intimidated, for sure.
Thank you. So I'm conscious of the time. I'm going to I'm trying to cleverly combine 3 questions from the audience because I think they're quite thematic in such. So we're asked, what could be possible ways to reduce the conflicts between ESG strategy and increasing shareholders' value? And then also we're being asked about, you know, ESG being such a hot topic. Some industries are going to benefit in the short term. So how do we make sure that many companies benefit from this move forward? And then we're also being asked around governments working on such areas. How are they going to actually bring together environmental considerations with the need of humanity? So I think what we're being asked is the bigger picture. As we look forward, and we have all these competing demands and priorities, we have this very clear ESG, SDG and climate change agenda. How can we really do this effectively? And how do we ensure that all the ecosystem and all of the stakeholders play a part in this delivery? Ivano, to you, just keeping an eye on time.
I'll make it very short. We live in an example of that. The UAE has been different to everyone else by setting long-term, keyword, long-term vision. Mm-hmm. If we look for short-term value, we will never be able to achieve SDG compliance. It's long-term that we are able to achieve on all of this. And I'll leave it to the other panelists to build upon.
Lena, to you.
Yeah, very, very briefly, Jessica, I don't see any conflict between ESG and doing the right thing and driving shareholder value at the same time. I think, to Ivano's point, long-term, this is what's going to be the most relevant thing for shareholders, and that will drive economic growth, very frankly.
Yeah. And as an environmental economist, I wholeheartedly agree with you. You know, the writing's on the wall. Huda, to you, for your answer to that.
I think it's very important, Jessica, for us to drive the conversation towards not maximizing profit, but maximizing value for companies. And this is what should the stakeholders focus on. It's about mobilizing all of the financial assets that we have to have an impact. And this impact will not just be the short-term financial impact as we have seen in the poll, but there should be an alignment process. And this alignment process is not the same. It depends on the industry. It depends on the scenario. It depends on the value that you could create, the geographical operation that you're part of. So there is a huge due diligence process that exists here. And there would be teams coming in the future which will be specialized more into this alignment process.
Yeah. And I think we need a wholesale philosophical discussion on the purpose of wealth and capital and investing that we should not shy away from. With that, can I get the results from the second polling question, please? Okay, so we asked, do you think short-term investment decisions may be an obstacle to long-term sustainable investments? And a whopping 75% of you said yes. So that's a fairly conclusive result. With that, I am going to say thank you so much to the panelists and of course the audience and of course the Pearl Initiative and ACCA. It's been great to have you here, and I'm going to hand back to Garda.
Yes, absolutely. Thank you, Jessica, and thank you, panel. We have had, thank you for everybody for participating and attending. We've had attendees from across the world, across the region, and we'd really like to thank you for moderating this discussion, and also Lena, Huda and Ivano for being the panel members and raising some really, really interesting points that we will be consolidating into an outcomes report and sharing it with you and the attendees and participants. So with that, I'm conscious of time. So we wish you a happy weekend ahead and stay healthy.
Thank you.
Thank you, everybody.
Thank you.